First of all, I'll have to say I am pretty much agreeing with RBA as one of the few central banks in the world. I think there needs to be a focus on the housing market. I think there certainly needs to be a focus on the macro-prudential framework, because I think the Australian economy down the line will need additional stimulus through low interest rate. I do see additional costs. I see it all the way to 175, maybe even 150. Of course, you cannot do that in isolation without looking into what the damage or the potential upside will be to the housing market. So I think what will happen from the RBA side is that they will need to move the macro-prudential framework agenda forward. I think they need to change the incentive structure. Negative leveraging needs to go away. Super funds for the second home, in my opinion, should never been allowed. And when I go around Sydney this morning, I noticed that every single bank has is advertised the fact that you can have zero interest for 1 year, zero interest for 2 years. I mean, I've been to Spain, I've been to Scandinavia, I've been to all these places before and after the housing bubble, and all the signs I see in Sydney this morning indicates to me we are right in front of a huge correction in the housing market. So I think the focus needs to be there. Also putting that into the economic forecast, it's very important to see, if you look at the growth for 2014 in Australia, dwellings, i.e. housing market, is up roughly 4%, personal consumption is down almost the equivalent amount. So what you're seeing is a huge shift from private consumption, productive retail sales into housing and services related to this. And that remains, a very lopsided way to do an economics. So I think they want to see, I'm not a socialist, if anything, I'm a liberal. But the banks, is doing a good job, but they are having too high a profit in GDP terms relatively to the rest of the economy, which is setting up basically a very risky trade where the ability to borrow and the cost of borrowing will be higher than the actual return you have. I think there will be that the Australian housing market has a higher than perceived risk of coming down 15-20% next year.